Hello everyone, friends. Mozart here. I'll record another interesting video for you in the meantime. Nothing significant is happening with the price of Bitcoin. Bitcoin currently doesn't stand apart from the stock market, unfortunately. It is directly influenced by the dynamics of the Nasdaq index, as well as the words spoken by Trump and the responses from the European Union, the Asian region, which will respond to Trump's tariffs, including in cooperation with Canada. Therefore, we analyze more deeply, examining the proposals and behavior of both long-term and short-term holders from the perspective of various metrics, and we try to track and predict whether it is given, and if not, where it will be, and what are the best prices to consider for buying back. At the end of this video, I will share my opinion on where we will stop and where we will turn around. The first chart represents, well, you could say it's a chart. I call it metrics, the absolute, realized profit plus realized loss in dollars for each day that passes on the network, not on exchanges, because an exchange is essentially just one large wallet for the network, hot or cold, for example, but across the entire Bitcoin network. So, at the moment, the current absolute sum of realized profit and realized loss has decreased significantly, and it has decreased to about $550 million per day. This is in absolute terms. These are levels, practically, of the lowest values in mid-2024. In the summer-fall of 2024, at the moment, we are approximately here. This is somewhere around May-June 2024, after which there was still a rebound, and only after that did we go to a lower level. Currently, there hasn't been any significant rebound, and we are trading within this zone. Moving on. This is, in principle, already quite a low level. That is, according to this metric shows that the market is in a depression. Very few transactions are taking place. Currently, liquidity is tightening, and such tightening cannot last long. Although, if we look at the current levels, it seems like it hasn't been going on for very long, and we still have some time left. But unlike previous periods, the accumulation, which was either at this level or at lower levels, typically, such periods of tightening lasted somewhat longer. With rebounds, of course, So far, there haven't been any, but they lasted longer than the current period. Currently, it is the shortest. There is still some time left here. Next, another interesting metric that shows the current inflow or outflow of capital in total, but not from the perspective of buying or selling Bitcoin, Ethereum, or minting stable coins, but from the perspective of net position regarding profits and losses. That is, here we take the realized profit of long-term holders and subtract the realized loss of short-term holders from it. So if we subtract the loss from the profit and still have a positive trend, it means there is a capital inflow into the market. If we get a negative number, as was the case on March 13th, it means the market is starting to contract and money is beginning to leave the market during bull markets. Contraction, even a momentary day like the 23rd, is an extremely rare event, which usually signifies either the end of a correction or the beginning of the formation of this end. The same thing happened in the summer of 24, twice, once in the summer, yes. This was in August, after the surge on August 5th, and the second time was in September, during another attack by Israel on Iran, I think, or maybe early on Israel. I don't remember. It happened once so far. No one is saying, and there are no guarantees that this indicator will go negative again, as it did, for example, last year. But this is possible, and it needs to be taken into account, especially if we consider the time buffer we have within the framework of the first indicator. The metric I showed earlier, the consolidation period is still not that long, but in bull markets, a net reduction is a rare event. We saw this for the first time since Trump's victory. Often, the chart is at the bottom only in bear markets. That is, a lot of money leaves the market during bear markets. Currently, we still have a bull market, and every effort is being made to prevent the price from falling. The greatest losses, of course, are borne by short-term holders. I remind those who are not yet aware that for blockchain, according to blockchain metrics, short-term holders are those who keep their bitcoins in their wallets. no more than 155 days. That is the dividing line, days, after which the likelihood of a quick sale of Bitcoin drops almost to zero. Up to 155 days, the likelihood of its sale is high. Therefore, this boundary was adopted as the division between short-term and long-term holders. So, if we look at the total volume of Bitcoins that are currently at a loss, that is, well, even for example, if Bitcoin was bought at 85 and now the price is 84, it is still considered at a loss, even if it's just by $1,000. Then at the moment this number fluctuates around 200,000 to 300,000 Bitcoins within this range, sometimes dropping to 2,700,000 during small rebounds. If we look at the history, in terms of quantity, these are the maximum peak values since 2018. Since 2018, it was only higher here. Only here when we started to drop, after the CME exchange introduced trading with futures. That's when we started to drop. Before that, such a large amount of losses in absolute numbers in Bitcoin coins had never occurred. Significant losses. Indeed, for short-term holders, the current situation is very, very bad, unenviable. But again, I repeat, here, the metric only shows quantitative analysis, not qualitative, but quantitative. Even if we bought Bitcoin and are only at a 1% loss in this metric, we would still be recorded as a coin with a loss. Although for us, for example, a 1% loss as long-term holders is nothing. We can withstand a 50% drawdown if we believe in a bright future. A cryptocurrency, say, in 10 years. Therefore, this metric only shows one side of the coin. If we look at the other side of the coin and take a qualitative rather than quantitative perspective and consider the percentage ratio, that is, the relative ratio of losing coins in relation to the total supply of short-term holders, overlaying it with two sigmas, one with a plus, a red one on top, meaning one standard deviation. The second one, this purple one, well, let's call it purple, below, is -1 standard deviation. We will now see that, in such a state, short-term holders were at a loss. Well, not often, of course, but much more frequently than with the first metric. And this, from my point of view, is a more accurate method of analysis, because it's not so important how many coins are currently at a loss. Just if in the previous cycle short-term holders bought 3 million Bitcoins, and in this one they bought 4 million Bitcoins, well, naturally, the amount of losses will be greater in absolute numbers. Therefore, it's more correct to calculate relative losses. And in relative losses, yes, we have risen by the first standard deviation. This is still considered significant. These are very large losses, and such events are quite rare in regular markets. But, according to this metric, this has happened before. It was observed twice in the summer, and once in the fall of 2024. Also, I believe this happened in August 2023. A similar period of losses was also present. Moreover, the duration of this loss period is starting to approach August 2023, but it hasn't yet reached the sideways market of 2024. And in bear markets, like in 2022 to 2021, this is the main condition for markets. In regular markets, on the contrary, the main condition is -1 sigma when short-term holders have good profits, simply because these are bull markets and such high losses are atypical for them. Therefore, according to this metric, we still seem to be in a bad phase, but we are still holding the boundary of the bull market. This is important to note. Further regarding the overall situation, specifically if we take all the coins that are spent in a day with a profit or a loss and divide them by those spent by long-term holders. They are most likely all selling at a profit, which is what the short-term holders are spending. Right now, they are most likely all selling at a loss. So we will see the following picture at the current prices for all the coins that are being spent, meaning, for example, if 100,000 Bitcoin coins are transacted on the network in a day, out of those 60,000, but 61% is the loss of short-term holders, the loss of profit, out of which only 2%, or 2,000 coins, The profit of long-term holders is 36,000 coins, and the loss of long-term holders is about 144 coins, so it's about zero. It's clear that they have almost no losses at current prices, because their entry price more than half a year ago was lower. The market is in a similar state if we take a cross-section. I'll update this metric like this. If we take a cross-section from the beginning of 2024, well, not even from the beginning, but the sideways movement of 1924 was not observed that often. Again, June, July, August, and the end of August, beginning of September. And it was also close at the beginning of October. That is, during all these Iranian and Azeri attacks. It happened 4 times, in such a large loss. The network was in relation to short-term holders. Now, this period of losses looks different. Notice, it's very broad, it's stretched over time, and this loss zone practically doesn't end. That is, if here we observe corrections, these pullbacks were much more frequent and the loss zones were shorter. But now, since around February 20th, we have a continuous loss zone, purely technically and purely logically. Everything here is leading to a strong rebound, a very, very strong rebound, somewhere in the area. Well, a strong level there is around $93,000 to $96,000, purely logically, and then it will be possible to decide. Is this the last rebound before real estate, or is this it? We overcome it and continue to conquer new heights, surpassing from age. Because right now the period is very prolonged and atypical. About this particular metric for the dusty market, I mean not overall losses, but short-term quick losses without a rebound, meaning there were no strong rebounds. We mostly have a continuous zone of losses. This is also confirmed by another metric, which shows us what? We take all these curved lines. These are our average prices, purchases of different short-term cohorts. That is, we take the general short-term holders. This includes everything up to 6 months, up to 155 days. And we divide them as follows. The first cohort, who bought Bitcoin in the last 24 hours, 2 in the last week, then up to a month, up to 3 months, and up to 6 months. So, this metric shows these red bars at the bottom, indicating a tough period for short-term holders, with quite deep corrections in a bull market, when at least 4 out of 5 cohorts start to be at a loss, at least 4 out of 5. At the moment, all 5 cohorts are at a loss, but even if it's just 4, it already starts to show them. So, according to this metric, it's also clearly visible that the current loss zone, without rebounds, is very long, even during a sideways market. In 24th year, these zones were shorter. The widest zone, probably, was already shorter than the current zone. That is, from August 5th, approximately to mid-September. And then there was another small zone. Before Trump's victory, now the zone is prolonged. And precisely because of the duration of these losses, I believe that everything is leading to a rebound. Moreover, a good strong rebound, not the kind of rebound we saw when Bitcoin just bounced back from 77,000, setting a high at 88. There it was, 88.8. It just barely missed my short limit order. I already wrote about this in the Telegram channel. This is not the rebound I'm talking about. I'm talking about a more serious rebound with a good surge according to all indicators, both on the chart and on the blockchain. This is the area, starting from the marks of 91 and ending at $96,000 to $98,000. Somewhere around there is where the rebound is heading. Everything is moving in that direction. And I assume that this rebound will happen when the market stabilizes and decides what will ultimately happen. Trump will make a decision regarding his tariffs. He is waiting for the final version because Trump constantly changes his mind about these tariffs. And the market is also waiting for a final response from the European Union and the countries of the Asia-Pacific region. How will they respond to Trump's tariffs, including Canada, although it has already cooperated with Europe and all the others? And then this rebound will happen. If these tariffs turn out to be not as terrible as Trump promised, this rebound will also occur. That is, the market is currently in a phase where, essentially, any slightly bullish trigger is a green signal for the growth of the Nasdaq, and it will become a very strong signal to buy Bitcoin in the short term with some targets in the 91 to 98 range. And from there, you can short again From the perspective of hedging, long dollar positions, for example, in my portfolio, I will likely move the limit order higher, by the way, because we've already dropped significantly from it. If we go up now, we'll likely go much higher than 88 to 89 on the rebound. Next, let's move on to the metrics that show why I don't think this is the end of the bull market, at least not yet. For now, this is a bull market for me, which is experiencing a very strong correction. And now, notice that I'm specifically talking about Bitcoin, because for many coins, for many altcoins, yes, this is certainly already a bear market. Many coins have even fallen below the prices that were at the bottom on August 5th, leading to even stronger sell-offs, no doubt about it. Although not all coins, but most of them. I'm specifically talking about Bitcoin right now. Why don't I think this is the end of the bull market for Bitcoin? Because there are metrics that also show the relative strength of losses. For example, like the pride and short-term holders. In this case, we are looking at unrealized losses being realized. We have already looked at that, and now we are looking at unrealized losses according to the metrics of unrealized loss. Right now, we are at some boundaries that have not yet crossed the threshold into a bear market. This red line at the top represents 2 standard deviations. If we talk about a lot of unrealized losses, and holders are ready to hold on until the end, especially in the spot market, here you need to consider 2 standard deviations. Not just one as in the case of realized losses, which is like a quick pain. You could say it's a futures pain. So, we have now reached a state that was observed on August 5th, right here on August 5th, and during another Iranian attack, somewhere at the end of September, beginning of October, I believe it was, to this value. Although neither there nor there did it reach the second standard deviation yet. Moreover, in previous bull markets, even in earlier ones, there were periods when we touched and even significantly broke through this line. For example, during the Chinese ban, it was a strong trigger specifically aimed against the crypto market. Here we went very far. And by the way, from my point of view, the bear market in 2021 started right here. And this was already a strong rebound to the bear market. Even though it slightly updated this high, it was already a rebound to the bear market, because there was a serious sell-off here, even the strongest corrections, let's say, in 2017, yes, they went down touched, for example, 1 standard deviation, but they didn't leave 2, the red line, meaning 2 standard deviations. Then 2019 was a difficult transitional period, when we seemed to slightly break through 2 standard deviations here. These were strong corrections, and then the final surge, triggered by the overall coronavirus situation. With the coronavirus, there was a general sideways market here, but you see, as soon as we start going beyond 2 standard deviations, the likelihood of further decline significantly increases, and we went even lower, much lower, which is not currently observed. So, in a general overview, let's take, for the last 2 cycles, on the left we have the year 2021, and on the right, the current cycle. Not in 2024, not in the current year 2025, have we yet exceeded the bear market line. 2. Losses. Unrealized losses have not exceeded the bearish metrics, which actually signal a transition into a bear market. So for now, the price is holding. It's just a very strong correction. And, once again, I'm talking about Bitcoin. The funding behaves the same way, overall across all exchanges. Yes, at certain moments it falls below 0. This is because the market is objectively weak right now, but it tries to recover very quickly. In 2024, it even stayed below 0 longer, spending more time there during different periods. Now it doesn't stay there for long, actually a maximum of 3 days, and then it resurfaces, transitioning to bearish. The market, in terms of funding, looks completely different, meaning we go deep, and linger there for a long time, around the 0 value in funding. And this changes the entire paradigm. It changes the market, meaning the sentiment changes globally, which also changes the market. This is evident in the funding. That's not the case now. That's not the case. Now, everything that goes below 0 is quickly bought up. And I want to draw your attention to the behavior of the so-called stable cohort among the unstable short-term players. That is, a specific cohort of holders from 3 to 6 months. These are the holders who will soon become part of the long-term cohort. In other words, they will elevate their level to long-term holders. Act more wisely among all the short-term holders. On this metric, we can see their accumulation periods of their accumulation and release. This is the orange line. If we look at how they act, their periods of high accumulation very often corresponded either to a reversal, to a new all-time high, or a very strong rebound. For example, here there was a good rebound and an all-time high was surpassed. Moving on. Here, this is already within the bear market, but I'm talking about the bull market now. So here during the May-June sell-off 2021, after the Chinese ban, we surpassed the all-time high again. Here there was at least a strong rebound. Moving on. Here already in the bear market, but there was also a strong rebound. And now, there is a very high level of accumulation. But so far, there hasn't been any strong movement, so at the very least I'm expecting a strong rebound. The same applies to activity, the so-called spending activity regarding how actively they are spending their coins. Separately, for about 3 to 6 months, the same thing but in reverse, they stop spending their coins, and now we are in a period that is very much like the Chinese ban. Right here we have the plateau of 2018 with almost minimal values. Activity is nearly zero, and every time this happened before a very, very strong rebound, even during the bear market, we observed a rebound right here. It happened, here we surpassed the high, but here nothing yet, no matter how long it took. As soon as they don't slow down their activity, it very often leads to rebounds. Here they covered the high. That is, in general, they rarely make mistakes, this particular cohort. Therefore, looking at them, I can reinforce my opinion that, so far we haven't seen a strong rebound, and it's more likely that it will happen. I can't say right now, and don't know if this rebound will turn into an update, a high, in this eye. I can't be sure anymore, but for objective reasons, because the sell-offs were strong enough. But that it will happen, I'm more or less sure. It hasn't happened yet, and most likely it will. However, the question is, from what prices are you looking? Let me show you the chart separately, here on the chart. In general, I don't have anything fundamentally new compared to my previous reviews that I've recorded the last month. I won't say anything new. I can only clarify one point. This particular pattern and what's happening, from my point of view, is currently the formation of a reversal for a rebound. More globally, it's still a sideways trend, quite broad. And since we had an attempt to break out beyond this white 200-day moving average, it was unsuccessful. Now we are testing it from the bottom, up, this moving average again. And from below, it remains untested. The annual moving average, which is total 3, it has already been tested overall. There is, however, a possibility to go even lower to test, for example, S3, to even test, S4 to go beyond the annual moving average, and then sharply rebound from there, like this, and for now, I'm only considering it in terms of a rebound, somewhere around where I mentioned, yes, around 97.6. Well, starting from $90,000, to take off these excess with a higher probability, these as will be taken off, even if we then enter a bear market and go from there, like this, smoothly downwards, everything into the bear market. With a higher probability, they will be taken off. This happens, in terms of indicators, in any cycle, before entering a strong bear market, a bounce that hasn't happened yet, but the annual moving average hasn't been tested. We can go lower, we can update this low, although we might not update it. I mean how to say, we might go for this bounce. Before we update this low, we might wander around here. It seems like with the tariffs, nothing terrible will happen, and we'll head there without any questions. In this period of low liquidity, it's evident not only from blockchain metrics, but also from volumes. By the way, futures volumes has significantly decreased in relation even to the last few months. They have dropped significantly. Nothing is preventing a strong bounce here. So, my two main scenarios are, we stay more or less at the current level, somewhere in the range of 78 to 84, without updating this low and then bounce back. And the second option is we update this low, either gently around the annual moving average, around 76, like this 75, or more strongly to 73 to 71, like this. That's the maximum. Now, what do I see? The maximum. And from there, we still go for a bounce. Something like this. These are the two main options, and both are upwards. Both upwards. And, for me, the best entry points right now are somewhere here. And here, the best, from the current levels to take. Well, you can, but not with a standard position. Yes, not with a full volume, maybe with half. But that would be like playing roulette because at the current levels it's objectively unclear. There's no strength in the market, not even downwards. Or upwards, you need to wait for at least some kind of signal. And here, when we come to this range, I will open a head short. Because here I don't know if this will be the final push before the bear market, or if we will move like this and then go to update the level. When I close the short here at a loss, my altcoins will have grown and profit more from the midterm portfolio, and I will still earn on them, and from the remaining midterm portfolio under the hashtag table. You can check it out on my Telegram channel. That's roughly the current situation and the main forecast. Thank you all for listening to this video. If you find this format interesting, give it a like so I know that you need it. It's more interesting than regular technical reviews. Have a great week. This was Mozart, and goodbye to everyone.